Hello guys, welcome back. In next 5 to 10 minutes, you are going to learn what you never understood in your life. It's working capital. And the concept of working capital along with all its related ratios, operating cycle and cash cycle. So let us see what is working capital. Okay, first of all, let us understand that today is the first day of our business. Started our business. And in order to start the business, let's say manufacturing, you have to purchase raw material. Now, we purchased raw material of rupees 100 on day one of the business. But we have not started using the raw material till day 7. So on day 7, we have started converting it to a finished good. It took us another 6-7 days to convert it into finished goods, and actual finished goods was made on day 14. Now, the finished goods which was made on day 14 was sold on day 23rd. And we received cash of that sale after another 7 days, that is on day 30. So please understand, guys, the 100 rupees spent on day 1, we received it back on the end of day 30. Now, should we just wait for 30 days? What will we do on day 2? Yes. On day 2 also, we will need to invest 100 rupees more. Day 3 also, we will need to invest 100 more. For how many days we will need? We, we will need to put this 100 rupees till the day 1's money comes back, and then the rotation will start. So day 1 money will come back on day 31st, day 2's money will come back on day 32nd, and so on and so forth. The cycle will run. Now, total working capital, will be capital for 1 day multiplied by your operating cycle. So my capital for, sorry, I will write it here. Capital used for 1 day multiplied by operating cycle. Yeah, this is the formula. Now, in our example, capital used for 1 day is 100, and my operating cycle, look at the operating cycle. Operating cycle started from day 1, ended on day 30. So that in our case, our working capital is nothing but 3,000 rupees, dollars, whatsoever the currency. Now, money required for day-to-day operations, which will be continuously circulating, is called working capital. Now, the period from purchase of raw material till the start of finished goods is called raw material inventory period. Now, from start of conversion of finished goods to completion of finished goods, we call it as work in process inventory period. From start of finished goods to sell, actual sales of goods, that is called finished goods inventory period. From sale of finished goods till receivable of cash, that is called debtors collection period. Now, addition of all these inventory periods is your operating cycle. Now, many times it so happens that you purchase raw material on day 1, but you do not pay them till day 11, So if you subtract creditors payment period from operating cycle, then whatever is remaining is called cash cycle. So cash cycle is nothing but operating cycle minus creditor payment period, that is cash. So this 3,000 rupees working capital, which I have calculated, is also called as gross working capital. And when you subtract creditors period, so 12, 30, 14 days into 100, 14 days into 100, this working capital is called net working. So working capital calculated from cash cycle is called net working capital. Working capital calculated from operating cycle is called gross working capital. Now, many a times operating cycle and cash cycle are used synonymously. So cash cycle is also called as net operating cycle and so forth. But the concept is same. Now, always remember, difference of current assets and current liabilities is a working capital, that is for balance sheet calculation. But actual working capital is this. I hope you understood this. If you have any doubts, please feel free to ask in comments. If you like this video, you know what to do. I hope you enjoyed the session. Thank you.